Good afternoon. This is the video newsletter for buysellshort.net for Sunday, August 8th. Considering the economic data we had on Friday, I would say the closing numbers on the Dow, not too shabby. We had the jobless report come out. We had a modest job increase, 77,000, not what the market was expecting. We also had a big revision to the previous month's number. And all in all, at the end of the day, it looks like the market has sort of priced in this crappy jobs market. We had an initial big sell off after the number came out, big gap down, and then, the market, as it has been doing throughout this rally that's, going on 4 weeks now, once the bad news comes out and there's a drop, somehow we are managed to crawl our way back to positive territory. Looking at the 15-minute chart, you can see we're still in this bearish rising wedge that's been in place now for about a month. We are a little overbought in the near term, with really strong resistance now at the 10,700 area. If we look at the daily chart, the candlestick setups we have here, not the most bullish. We've got RSI sort of flatlining out. Volume, as it typically does in the month of August, is really starting to ease off. We are up quite a bit. We're up, 1,000 points now over the last month. So there is definitely room for a retrace here. Whether it happens remains to be seen. August can be a month where, no matter what the news is, we sort of grind slowly higher. Volumes dissipate, and it's pretty easy for short squeezes to go on. Over the last couple of weeks, we've seen a lot of shorts just get smacked over the head, and many are probably just sitting on the sidelines waiting for September to come along. As it stands, support right now would be 10,400 and then 10,240. That's the 50 and 200-day moving averages on the Dow. Looking at the SMH, SMH has really just died here over the last week. Died as in a lot of the volatility has disappeared. You can tell by RSI just flatlining here at the 50 and a really tight trading range of about 50 to 70 cents, which is really unusual for the SMH because, as you can see, over the course of a couple of the weeks, the SMH can go up and down 10-15% easily. Right now, we've got support at the 50-day moving average at 27.40. If I was looking to pick up a scalp position on the SMH right now, I'd be eyeing the $27 area with a really tight 10-cent stop at 26.90, or, as I've said before, a break of 29. Now, one mild positive on the SMH right now, check out stochastics. We had a break below 50, but over the last couple of days, it's been sort of easing up nicely higher. Last time we had that happen was back there towards the end of May after the flash crash, and then we had a nice little spike here afterwards once that happened. So we could see, a pop here, especially if we get a dip to 27 to pick up a scalp position. Quick mention on the US dollar. You guys will recall back in May and June, it was the end of the world. Dollar had a double top in place. The euro was done as a currency. And look what happened. Dollar just almost a vertical plunge here. Euro now rocketing off to, back to its previous highs, and all seems well again. We're tagging along the 200-day moving average right now, and, we're probably going to see some more downside weakness in the dollar this week. We've got the Fed meeting on Tuesday. Given the jobs report and the hints that the Fed have been giving over the last couple of weeks, market is going to be looking for some hints from the Fed this week about more easing, be it buying treasuries, buying more mortgage-backed securities, or chopping the rate that banks get paid for parking their money at the Fed. Anything to start jumping money back into this economy. And, believe me, I think we're going to finally see Helicopter Ben make an appearance in the very near term. Bad for the dollar, great for commodities, and in the near term to medium term, very, very good for stocks, especially if we get them moving back into mortgage-backed securities again. You can attribute much of what they did last year, that 1.5 trillion in buying they did, was a big reason we saw such a big move in the stock market. So what the Fed does this week, or at least what they say, could definitely impact the market. So we're probably going to see sort of I wouldn't look for us to break out much until the Fed meeting's over. So it's going to be more of treading water over the next couple of days. I'm looking for, scalp positions and not looking to jump into too many plays. Speaking of plays, FCEL, we've been patiently sitting on this one for the last week. Every time it looks like it's going to break out, we've got sellers come in. But as you can see, it's been keeping a pretty nice trading range here, $1.28 to $1.42. We hit that $1.26 on Friday and then a nice bounce back above the 130. Off the last couple of times we've seen that happen, we should see a $1.37 to a $1.40 plus on Monday on FuelCell. Shaping up here to have a nice little cup and handle formation here. Still like this play very, very much. A close over $1.40 and it will be off to the races on this stock, which is why we're going to keep watching it. Core position, scalp position when it dips below $1.30 for a nice 5 to 10 cent scalp. PTN, very nice move on this one over the last couple of days, and then very strong action on Friday. Even with the market selling off, we had PTN come back and close or push to a new high. Very, very nice action. We're holding the 50-day moving average. Next target on this one is a move to the 200-day moving average at 27 cents. And this one is acting a lot like our other big monster play, DSCO, which over the course of a month ended up giving in a 50% move for us. So here's looking at the same sort of thing here again. Couple of stocks to keep an eye on this week. One we've played a few times, ARWR, getting very, very tight here on the symmetrical triangle. A break over a $1.20 should light this one up for a move to a $1.30, $1.40 plus on this one. Would be keeping a very close eye on this one. Or, you could jump into this one around the $1.10 area and play stops at a $1.05. RSI trying to break 50. MACD's been pretty strong, and stochastics are holding the 50 level. Another one to keep an eye on early this week, Level 3, LVLT. We played this one into its earnings a couple of weeks ago. Very nice, got a very nice pop on this one. And then since then, it's been treading water in a pretty tight range. And the chart looks really attractive here. This next break over a $1.20 could see it make a run on its 200-day moving average up there in the upper 130s. RSI is sort of flatlined. We've got decent buying. Unbounced volume slowly ticking higher, and stochastics has been holding the 50 level very, very nicely. I like seeing this kind of action when we see a chart set up like this, so definitely one to keep an eye on this week. Last but not least, ONSM, on-stream media. We've played this one a few times before its reverse split. Big move over the last couple of days on this stock. This is a watch for a short tomorrow. Going off the 3-day rule, we've had this stock gap up 2 days in a row now. Typically, day 3 is the shorting day on a stock like this. You would look for a spike gap tomorrow, hopefully towards the 200-day moving average at a $1.76. And then downside target would be a move back to the 50-day moving average. So back to a $1.12 to a $1.20 would be the downside target on this one. Can't see this one getting much higher. Hopefully they're able to gap this one up again on Monday morning so that we can grab some shorts on it. So that's pretty much it for the video going into this week. Not a whole lot of new plays. FuelCell, still patiently watching that one on a couple of our other intraday scalp plays, but we've got the Fed meeting on Tuesday, so we're sort of going to be in a holding pattern on seeing what the market gives us going into that meeting. So that's it for the video. See you guys in the chat room tomorrow. Goodbye.